Vitale, American Retirement Advisors with the Grading Investments Weekly Talking Points for starting January 2024. Happy New Year, everyone. Let's look into the week. Markets ended the week of the end of the year in positive territory. The S&P 500 was positive. The Russell 2000, which is a small cap stocks, declined. Bonds were also up for the week at end of the year in a positive territory after performance rebounded in the fourth quarter. The 10-year Treasury yields declined and ended the year nearly at the same level of 2022. Upcoming economic releases, data regarding job openings and unemployment rate will be reported this week. Jobs were very resilient in 2023 and very closely watched for the trend in 2024. So as we look into 24, what are we looking at? The biggest question is, can this keep going? It's our opinion in the short term, expect a little bit of volatility, potential correction after a furious rally ended in 2023. So in the intermediate term, however, these are still signs for optimism. We think it's going to be a good year for a little bit. For the bond market, we don't believe the Fed will react as aggressively in the market anticipates unless economic trends worsen from here. Long-term rates have been extremely volatile since 2022, and this is probably going to continue as investors monitor the Fed actions and economic trends closely. The current bond environment would suggest prudence over aggression as the payment for relative safety continues to be more attractive. In the stock market, we still believe that the economic trends in corporate earnings are areas that are supportive for continued growth. And we welcome the broadened environment where more stocks participated in the end of year rally, and this would be healthy for overall market in 2024. So this is a little bit different commentary than most. Marianne Montaigne, who was our money manager with Gradient Investments, usually did the commentary. She has just retired. So they're doing it a little bit differently now. So we're going to start to change it up a little bit. They're giving us a commentary to go off of every week. So we'll try to infuse a little bit more. We're going to attach this with the email that you get this, and you'll see what we're talking about. It's going to have more numbers, more graphs. But what you're finding in the year-end recap of 2024 was a strong year for the NASDAQ. It was a strong year for the Magnificent Seven, which is all those tech stocks that were up a lot. But the value stocks, which is our G50 portfolio, didn't do very well. Value was only up like 5% last year, but it only got hit 5-6% the year before, where everything was hit 30-40%. So it's a little bit different. You see the correlation. Last year, the S&P was up 25%. The NASDAQ was up 37%. So things rebounded very nicely last year. Earnings were still very good. What we're looking at right now is if the Fed decides to start lowering rates, that could adversely affect the market if they do it too quickly. Now, if they have another pause in the interest rates, that's going to slow it. That's going to be optimistic. If they keep pausing, that's good. If they start cutting aggressively, that's bad. That's what we're going to see the big sell-off. People are still believing we're going to see a little bit of a sell-off, but we're still looking at the presidential year or the election year for 2024 that we're in now. Historically, in this, you look at all the different variables, should be a decent year. We'll see how that works out. But we'll keep you posted as we go. And that concludes this commentary for this week. God bless you. Thank you so much for being part of the ARA family. If you'd like to get a hold of us, 810 or 855-756-5700. Visit us at araadvisorsinc.com. Make sure you reach out. Did a lot of Roth conversions in the fourth quarter last year. Did a lot of different strategies. We don't want to wait till last minute again. So we want to keep monitoring the tax situations. We want to make sure that you're equally, properly allocated in the market. As we talked about before, with the interest rates still up right now, they haven't come down. We still have huge opportunities for the guaranteed market. When you look at the annuities with the big bonuses that they're giving right now and the big guaranteed rates that they're giving right now, such an optimal time to look at some old ones and redo them, or to take some winnings off the table and put them into guaranteed. So I don't want to miss that boat. But otherwise, we're going to stay the course, be invested properly, and those who are invested properly and don't keep moving back and forth are the ones who are going to win the game. So God bless you. Take care. We'll see you again next week.